Afternoon. Good afternoon, everyone. Thank you. Thank you for being here. So we have an exciting topic, and we do have limited time. So I'm going to jump right in and get started with a perhaps like a quick round of maybe like a 60-second quick round of introduction. Would request the gentleman to maybe we can just go in any order. Maybe Anup, we can start with you. If you could just quickly give us a quick intro, and then after that we'll jump back into the panel.
Sure. Uh, I'm Anup Agarwal. I lead Fintech investments for IFC in South Asia. Many of you may be knowing about IFC. It's part of World Bank. We have very strong focus on India and financial inclusion. We have invested in several banks, NBFCs, housing finance, microfinance, and of course, a lot of fintechs with the objective of accomplishing more and more financial inclusion. We invest across very small to very large investments, equity, debt. So I'll just stop here, given
All
the
right.
time constraint.
Thanks, Anup.
Thank you.
Ashutosh.
So I'm Ashutosh Singh. I'm the Chief Business Officer at NSDL Bank. Just a little bit about the bank. We are a 4-year-old bank, payments bank, and we have a business interests across financial inclusion products like DMT, AEPS, micro ATM. We do a lot of work on neobanking, and in fact, one of our partners is on the same panel. We also do a lot of work on prepaid cards, and there is obviously capital markets, and that comes from legacy. So essentially, we are mostly a B2B bank, and technology is obviously a very key enabler for us in everything that we do. Thanks.
Thanks, Ashutosh.
Hi everybody. I run a platform called Chqbook, which is a neobank for small business owners. Our focus or target segment is actually kirana stores, chemists, traders, restaurant owners, and so on and so forth. Usually who have a turnover less than 40 lakhs. For them, we actually have the Chqbook app, which has a full functioning current account, for which we partner with NSDL Payments Bank. We also provide lending and insurance across the board. We have about 250,000 revenue generating customers right now. We onboard about 40,000 customers a month right now. Thanks.
Hi, I'm Gurjodhpal. I lead Tide in India. We are a financial platform for micro and small enterprises. Essentially, we aim to help them in managing their financials and admin and save them time and money so that they could focus on doing their business, what they do best. We are, the leading SME-focused challenger bank in the UK, having close to 9% market share. And we are in our early days in India, which is our second market, after the UK, and building out for India market.
I'm Nimesh, and Xebra is our second venture. And what our first venture taught us that while running a SMB business in India has its fair share of challenges, very unique to our country and the people that we deal with. So that helped us in putting together an integrated business suite where you have all the modules any small to mid-sized business would need. So you simply subscribe to us and let the software take care of your business while you handle your sales and get further growth. Thanks.
Thanks, Nimesh. I run Freo, which is, I believe, probably India's largest consumer neobank, solving for borrowing, saving, and spending three basic financial needs of people. I mean, today we are doing business in about 85% of India's PIN codes, over 1,200 cities. With that, let me quickly jump into the topics. We have some really experienced panel members here. Maybe I want to start with Anup. Anup, I want to get you in and talk a little bit about, we say neobanking. We all understand banking. Neobanking is new, and you've seen financial models, fintechs, NBFCs, banks globally. So if you were to talk in very simple terms, what in your view is, let's say, a use case for a new age bank or a neobank in India or worldwide? How do you see it, and what do you think makes for a successful neobank? Like, how, you've seen this globally. What are your thoughts on that?
Yeah. So, first of all, let me put it like this. While there are several banks all across the globe. But still, there are huge product and service and which is leading to sort of inadequate access to finance. With new technology solutions available, what we are seeing, a lot of entrepreneurs are coming up and they are setting up new platforms. And some these platforms, if you see across the globe, be it Europe, US, Latin America, Asia, of course, India, a lot of them have got set up. They are quite far in their journey. Some are still in the making and they are, getting ready. You find them in different stages. So, and stages in the sense, if you look at products, let's say somebody started with one product, then they got more products, and now they have multiple products. If you see scale, you will see, in terms of customer base or revenues, that also varies, and it has really grown from very small to very large. In fact, I don't want to name any players here, but some of them have grown as big as more than 50 million customer base, right? Now, if you see in terms of profitability, that's a mixed bag. Of course, we see also trends of losses coming down. Some have become marginally profitable. And that's very interesting to see. And if you see the licensing thing, some are unlicensed, some have applied for, some are licensed. So that's a mix. If you see in India, you see different platforms focusing on individuals, MSMEs. Most of them have partnerships with existing banks. Business model, I would say, is evolving, and I'm sure in near future we will see scalable, high impact models. Now, in terms of success outcomes, that you were asking, there are various parameters, but I would put it, let's say, if I were to pick two, impact and sustainability. So very clearly, some of the business platforms have shown very high impact, in terms of millions of customers being reached out and thousands of MSMEs being reached out. In terms of sustainability, again, the journey is still on, and some of them have become well established, but several are on their way. So in terms of comparison, I would not want to sort of compare because each market context is different. So India is a different market versus other countries. Thank you.
Got it. No, thanks, Anup. Very interesting. Impact and sustainability, two things. You spoke about, different models, different banks. Maybe Ashutosh would like, for you to come in here. Now, we know that while neobanks are coming in, new banking models are coming in, existing banks are not going away anywhere. In fact, there's a strong push to set up digital banking units by the government. So maybe one question and an extension to it. How do you see coexistence of, let's say, neobanks and digital banking units? And in your view, how do you think banks need to cooperate or collaborate or compete with the new age banking models? What's your view on that?
Sure. So let me start by quoting a very famous aphorism, which used to get, which was basically very popular 4 years back when neobanking was just getting some traction. And that time you would hear many people say that when it comes to the competition between the two, it's basically about whether the banks get technology before the fintechs get distribution, right? So survival of the fittest. That's how they used to put it. But honestly, in my view, there are so many sectors where the entrenched players, entrenched banks have still not made any significant headway. For example, in the rural populations, in the unorganized sector, the gig economy. So clearly, I think the neobanks or the fintechs are stepping up to the plate there and doing a fabulous job in terms of extending the whole scope of financial inclusion. And when it comes to the different types of models, in my view, this is definitely a collaboration that will exist, and clearly the last 2-3 years bear that out in terms of very positive outcomes between banks and fintechs. So, for example, if you look at there are I think 3 models that exist in India. One is the model that you pointed out. Many entrenched players are now spinning off digital banking units, running it as separate, digital organizations within the overall scheme of things. So 811 is one example that comes to mind. YONO is another one, right? Then there is the other model where banks like us are tying up with fintechs. So the fintechs in turn can provide the store of value on the back of licenses that we provide. So there are multiple models that exist, and I think there is room under the sun for everyone to flourish and prosper. So yeah, my view is I think the collaboration is depending upon the size and depending upon your own ambitions, you have to take that call. So I think in our scheme of things, at least we realize that this is a faster way to hitting profitability, and as we scale, maybe we look at then having a distribution reach of our own. But I think the B2B way also is a very sensible way to go, since it's not a cash guzzling model, so to speak. So it really helps you get off your feet a little faster. And once you gain traction there, once you hit sizable numbers there on the B2B side.
You touched upon B2B, as an approach, and then jumping into B2C. So I'm going to maybe take that cue. Nimesh, I want to come to you, talk to you a little bit about business models, right? So obviously there are different business models over there. One of them, just taking a cue from what Ashutosh mentioned, could be like B2B or MSME. Fintech business models. Any thoughts on how you are seeing those business models evolve, or anything new that you're seeing is like a business model innovation, or is it an existing business model which requires an operational excellence? What are your thoughts on that?
So I think the age-old banks enjoy two things. They have a lot of trust. They enjoy trust and they enjoy distribution. But I think what's happened over these years is that they've not been able to translate that trust and distribution into more customers and into providing more value to existing customers. And I think this point of collaboration is something that we feel will be a game changer for the existing banks. Because as businesses evolve, the needs and requirements are changing. So banks also have to answer this question that what are the key problems that they are solving for their customers, apart from just providing a current account and a salary account, which is constant across all banks. So that's where the space we feel that, and that basically got us interested, is to offer additional tools, softwares, which the B2B customers would require, and which are integral to banking, which are in sync with banking. So the whole idea of also us to get into the space was to offer like a complete business suite, which has all the problem solves, all the pain areas of tax, accounting, analytics, everything clubbed into one. And then when you integrate it with a bank, then it becomes a more holistic solution. You are now becoming a partner to MSME and not just a banking solution provider, but a partner in a much more long run. So I think that's where the future is, and these collaborations will help the age-old banks score over the other new set of banks that we see.
Got it. Now, thanks, Nimesh. That's interesting. Gurjot, I'm going to come to you next. I have a larger question in mind, but before I jump to that, would love to see if you have any thoughts on the B2B MSME fintech model itself, because you're also approaching it from a very different angle at Tide. Any thoughts on that specific point?
So the way we, approach this is that we look at traditional, players in the financial ecosystem, be it banks, NBFCs or others, as manufacturers, and they are distributing very well to a certain segment in the market. What we call neobank, I believe are a layer over top of that, which is a tech layer, an experience layer, a distribution layer, which essentially, from a MSME standpoint, helps solve for the overall financial needs. Micro and a small enterprise has a lot of financial and admin needs. And, at the back of those needs, it's not just a bank. There are multiple, manufacturers who are there at the back end, and they have to interact between each other. Now, players like us make that interaction very easy. I'll give you a very simple example. I do not see a bank solving, invoicing and collections for a micro and a small enterprise as a segment at a level at which we can solve. So hence, together we could bring a lot of value to various segments, whichever, we are focusing on. So that's how we intend to see it. And there could be a level of regulation at both the levels, right? If you see the way Indian market has evolved, a very good example is to look at payments. There was a time when, just banks were providing payment gateways. Then there came in a time where there were payment gateway aggregators over top of it, right? Banks were the manufacturers. These were a layer on top of that experience layer, a technology layer. And essentially both of them collaborated to, build the market. And as India was transforming, both of them collaborated, and there is space for both to evolve and thrive. And now, over time, we see that there is a PAPG regime which regulator has come up with, etc., which is very different from, what was there earlier. So essentially, we see this as collaboration, reaching out to larger segments of the market and then solving deeper for certain segments, like we are solving for, say, micro and small enterprises. Bunch of people are solving for consumers. We saw a panel earlier who are specifically solving for women. So the use cases and depth, I think that's what we would bring to the table.
Got it. It's an interesting point you mentioned, talking about depth and our, let's say, traditional incumbents or banks, are all of them willing to go to that level to provide that level of service, whether you call it a microservice, or are they just providing like an infrastructure and expect the newer companies and business models to build on top of that? But talking about depth, Vipul, I want to come to you. Depth immediately translates into one big question, which is about financial inclusion. Right now, we all know that the penetration of, let's say, basic bank accounts is pretty decent in India. Now, active bank accounts versus inactive is a different matter, but one can confidently say that through all the initiatives being taken, India has more than 800, almost close to 900 million bank accounts, active or not active aside. How are you seeing, from your perspective, how do you see, let's say, neobanking as a business model, financial inclusion? Do you think that they're aligned in terms of reaching the last mile or the depth, or do you think it's still going to be a little more elitist?
Right. So I think we look at it from a customer problem point of view. So, a typical small store owner anywhere in India, for that matter, from whom all of us buy stuff, he'll take anywhere between 20 to 40 days to open a current account. That's the reality. And he'll have to go and actually stand in a queue, given a lot of documents, paperwork, etc. And this is also true for PSU banks, cooperative, private banks, etc. So I think one of the things we were said, okay, can we bring down the turnaround time, make it digital, because that's where, neobanks and technology, and I think the partnerships help with banks. And we brought down, the turnaround time to actually opening accounts in 10 minutes. So that's a paradigm shift. Something that used to take 20 days or 40 days comes down to 10 minutes. It's obviously game changing. And because of that, we also have a lot of organic customers coming in on our platform. So I think that was one problem solved. Second one was, how much time is he spending on cash deposits? The cash is still a big part of the customer's business today. But to deposit cash, he has to go to a branch, which could be 5 kilometers, 10 kilometers away, and he basically has to travel a lot. So how do you kind of solve that so that you can do cash deposits much faster, much easier? You have an AEPS infrastructure, you have all of those cash deposit points, micro ATMs. Leverage that, start doing something over there. So I think everything that we do has been from a problem-solving point of view of the customer. The third thing we realized is that this customer also needs, why does he need a current account? Just like how all of us have a savings account for our salaries. Why do we need it? We need it because then against that we are able to get credit cards, home loans, auto loans, two-wheeler loans, all those kind of lending products. That's the main leverage that you have. And for that luxury of being able to give loans, you also are willing to give taxes, right? Like all of us do. So now, however, in this customer segment, while he might have, those accounts are there and a lot of them are Jandhan accounts which are non-operative, the guy doesn't get, the shopkeeper doesn't get access to loans. And he ends up taking money from a money lender 3 to 5%. And, a current account or savings account in a very simplistic fashion is actually just a ledger of financial information, which you leverage to then, get access to lending, etc. So our goal also is to, how can you provide loans? And we've been doing lending longer than we've been doing accounts. And that allows us to actually give customers access to lending when they need it, so that they can actually use it to expand their shop, get into a new business, expand into an ancillary business. We've had customers who have a grocery store who opened a small kitchen at the back and start delivering in the catchment area, right? Things like aloo parathas and Maggies and meals and stuff like that, corporate setup. And those things really help not only employ more people, there's a shift from villages to cities. They'll have relatives in villages who will come to the city, start working. And all of this is a virtuous cycle which promotes financial inclusion, because that customer, or that shopkeeper or trader or chemist shop needs, what we internally say, we say, why should the upper middle class or the rich people in India have customer service like American Express? Why can't this customer, who's actually contributing to 30% of India's GDP, have the same level of experience as an Amex customer has? And that really is the goal. Give superior customer experience, build features which solve for him, and automatically you will do financial inclusion. You will also make a ton of money, because you don't have branches, you don't have, branches are 50% of a bank's cost for most of them. And so you just do away with all of that, and it's a big plus.
So I'm going to pick on a couple of words you mentioned, and I want to get views of a founder and an investor, both of which we have on this panel, which is about making money. Now, all of us read enough about sustainability, profitability. Do new age businesses make money? How long can they afford to not make money? Is it, and that's a huge question that begs attention from all corners. I want to go first to Anup. Anup, you have a completely different lens, where you have the luxury to also evaluate business models, but at the same time, you are deeply involved with businesses. Long-term profitability and sustainability. I mean, that's the ultimate question, right? Businesses may not be around 10 years from now. What's your view? Neobanking or even these business models, do you see a clear line of sight for profitability, sustainability? And the answer could be different for consumers and MSME, and I know we don't have a crystal ball here, but what is your view? Do you see a line of sight to profitability, sustainability? And be frank. I mean, if you don't, then let's call it out.
So, I would want to answer it in a bit different way. So at a global level, if you see, there are clear examples where these type of platforms have become profitable. Now, in the context of India, of course, we have to see, clearly, there is an opportunity. There is no doubt about it. In terms of the market that we have, huge customer base, both in terms of individuals and MSMEs. Different types of new products and services can be provided, right? If you look at, the current practices, the cross-sell ratio is quite low of different products being sold to individuals and MSMEs. So the real point here is, how will the unit economics work out over a period of time? So can a platform really, after starting with one product, start offering other products, which can generate more revenues? And can they really manage things in a proper way? So, of course, issue, some of these points are there, like in terms of cost of acquisition, right? Or do you have full revenue with yourself, or you share revenue with others? So, if you are in a partnership model, of course, you are sharing revenues, but then you are also saving probably on your cost of acquisition. How do you manage your operating costs overall, so your operating leverage benefit comes in? So these are some angles. If you see some global examples, very clearly it comes out that platforms with loan products, uh, they typically are doing well. Now, question then is, do you know how to source customers? Do you know how to underwrite? Can you manage your credit losses? So these are some interesting angles. And of course, the opportunity is there for all the entrepreneurs. Whoever does it well will certainly be profitable in the long run.
Fair enough. I think that's a good articulation. I've taken away a few things. Cross-sell ratio is critical, obviously. Customer acquisition cost, another thing you mentioned, and revenue share if the model is one of collaboration. And these three things one has to focus on. Great. I'm going to go back to Vipul. I want to hear the founder's view here. But very quickly, Vipul, just to make sure that we have enough time. But what do you think? Sustainability, profitability, is there a line of sight? How does a founder look at it?
So, I mean, I was a banker earlier, right? I worked with SDFC Bank, Citi, and so on and so forth. And so obviously when I'm now a founder, but profitability has obviously been there in the DNA, right? So, and making revenues is also there in the DNA. And initially when I started, and got into the startup world, it was anathema to even talk about revenues at one point. And so now, of course, this year things are changing. But the point is that we've kind of been at Chqbook, of course, been revenue generating since day one. The other thing that we also believe, and this is part of my HDFC Bank learning, because I was there during sort of the 2006-7 period to 11-12 when we started doing cross-sell. And the bank went from like under sort of 10% cross-sell to a point where in some businesses it was 80% cross-sell happening, like in credit cards to CASA customers. And that was a fabulous journey. And obviously, over that period of time, the unit economics, the cost per asset, the asset quality, all of that improves. So obviously, tremendous respect for what the bank was able to do, and that's reflected, of course, in their profits every year. It's a phenomenal institution. I think one of the things that is, something that we are trying to emulate is also look at cross-sell ratio really closely. So we've got to about 25% of lending now happens to existing customers who are there, and I think we want to kind of grow as we go along to like 50%, 60%, 75%. And that automatically brings in profitability. So, and of course also improves asset quality because you have, for example, in our case, current accounts, we have transactions happening, etc. And you can therefore calibrate asset quality way better. And you can decide things like pre-approved loans, overdrafts and stuff like that, which actually help the customer, reduces his cost, and at the same time is fairly profitable. So I think, and then insurance is cross-sell, both on the lending side, shop insurance, which is a big, gap in India, protection-based insurance, that's been our focus as well. And all of these are fairly profitable. So in terms of revenues, we've sort of doubled revenue every year.
Yeah.
We kind of continue doing that. So definitely super important. In my opinion, you can have like a gestation period. I think investments is sort of a NPV of future profits. And those are definitely required because with technology you can scale very fast, and that's where investments come in. But obviously you have to be on a path to profitability.
Got it. So I think one of the things about getting to profitability also is business model, right? Who pays for customer and how does a business really make revenue? But it's one thing to quickly turn revenue and profits. It's another thing to do it in a manner which, from a regulation standpoint, is also, let's say, long-term sustainable. And Ashutosh would love to get you in here. One of the biggest things today in financial services, which we hear a lot, is that do a lot of young companies understand regulatory frameworks? Do they understand regulations? Do they have the maturity to understand how does one build a business in collaboration with the government? And what does it take to build a sustainable business model which is operating on the right side of regulations? What's your view on that, Ashutosh? How do you see that panning out?
So when it comes to regulations, I think this is a discussion we keep having with all our fintech partners. Any new circular, from RBI, any new press release, I think the reaction The initial reaction is knee-jerk, sometimes over-exaggerated, and it clearly bears out. This is an example I think everybody in this room will relate to. When OTP was introduced as a second factor authentication maybe 10 years ago, or maybe a little more than that, for e-com transactions, I think the champions of the fintech community, at least most of them, felt that it's a friction in the journey, right? Because it's adding an extra step. But, now, obviously, with the benefit of hindsight, we know that this was one of the best things that happened, actually, from the point of view of safety and security of online transactions. So I think somewhere there is this growing realization now that the regulator in our country is very progressive, signaling from the top of the house, which is the government, the regulators of the financial sectors, all of them, and also NPCI. They are far more visionary than we actually give them credit for. And the SMS example, that OTP example was just one example to drive home the point of how they could look at the safety, security, and think about. So sometimes the point I'm trying to make is sometimes a little bit of friction in the journey is good if you are community centric and if you look at the overall benefit of the ecosystem in the long run. So this is a discussion we keep having with our fintech partners, because whenever a new circular comes about, we obviously come back to the drawing board, and then it's like back in the trenches kind of a scenario where you have to rework the model sometimes, rework the journey sometimes. But I think, like I said, signaling from top of the house, especially in India, has been extremely good. I think the government, the regulators are extremely progressive in their mindset, and they're always open to having a discussion and dialogue. Second point I wanted to make was in the case of our country, RBI especially, the regulatory sandbox. This is again, obviously we have instances of this in countries with a much smaller market like maybe Canada and Australia. But countries such as US also do not have a proper functioning regulatory sandbox kind of model that RBI thought of in maybe 2018, right? And so basically the idea of a regulatory sandbox is to get all the stakeholders together, right? The fintech players, the banks, the consumers, and test it out in a controlled environment so that the full scope of the product and service can be tested, not just from a business viability standpoint, but also from the customer safety and security standpoint. Lo and behold, today three of the sandboxes are, have already been successfully tested, and the fourth one is underway right now, which is basically on mitigation of financial frauds in the ecosystem. So regulatory sandbox is another example of how progressive our regulatory ecosystem is. And thirdly, within RBI, they set up. So the idea is obviously they are giving recognition and they realize the role and the importance of fintechs. Because like I said, I think there is an unmistakable underpenetration in sectors such as the gig economy, right? In sectors such as the rural populations, in sectors that Vipul is catering to, the unorganized sectors, right? MSME sectors. So RBI also, I think, realizes the role fintechs and financial services companies play when it comes to basically taking a product out there to these sectors, right? Which is why they set up now a separate fintech department. Earlier it was under the Department of Regulation, and in 2020 it moved under the Department of DPSS, right? So clearly, I think the regulatory ecosystem in India is fairly progressive. If you're able to understand the long-term impact of what they're trying to achieve, I think people will come around. I think fintechs will also come around, and I think mostly it's been encouraging so far.
Got it. So I think the one key thing from what, yeah. So one key thing that I took away is that it's an invisible cost. If one ignores it, it comes back to bite you later on as a business model. But if you factor it in upfront, then you rethink your business model, because the regulatory framework is there to support you, but you need to factor it in as you're trying to build products out for the future. So I think we're kind of running out of time, but I do want to address one question, and maybe I want to get Nimesh and Gurjodhpal, both of you in, but we'll try to keep it under 60 seconds for each of us. So the support from banks, when you think of it from an open banking standpoint, So at some level, you do need to rely on integration with banks for, let's say, if you're building a layer of services on top. It could be a core banking ecosystem on top of which you're building a service or an experience layer or an application layer. But what do you think, keeping in mind that you do need to comply with regulations, you do need to have a business model where cost makes sense for you? What do you think about the open banking support? Gurjodhpal, maybe you can go with you first. Just under 60 seconds, what do you think about the open banking support that is available from banks?
Well, you have to go bank by bank here. But the banks, who've been open to working with fintechs on the open banking side, I think they have some robust tech in place. And the good thing is that, they understand regulation really, really well, in depth, and they have built that tech based on that. So hence, there is a framework with which you have to work and integrate with them. A lot of work has happened over last few years, and as we say, we stand on shoulders of giants. So a lot of work has happened over last few years by banks, by fintechs, etc., which has made the the ecosystem, which has brought a lot of clarity to the ecosystem, and hence there is a lot of scope of integration, and we find a lot of traction in that integration and collaboration.
Got it. Nimesh, you want to come in on this?
I think he's covered this point well, but I want to raise something else which is fairly critical here. So while we were building Xebra, two things that we noticed and that we spoke to more entrepreneurs. One, the lack of financial understanding. If you speak with most of the owners, most of the founders, they are very good with their own domain knowledge, but when it comes to understanding money, understanding cash flow, how to better handle it, it's really not there. And not only are they not aware, they are also scared. So whenever we would ask any questions, it would be like, "Arey, wo mera CA handle karta hai," or "I can't do this, and I don't understand this." So that was one gap, and second was getting data. A lot of MSMEs don't get data on their own business. So that's we felt was the two areas that are pretty huge. And the people that these MSMEs would trust would be banks. At a certain level, there was that inherent trust that they enjoyed. So we said that let's fill that gap by giving them a tool where they get this data, where they understand money better, where they become comfortable with the terms of money, how to handle money. And this is where we feel that banks will provide a role of not just giving the core banking, as a software, but also coming on board as a partner to educate, to teach, to provide that data and build that long-term partnership on which, MSMEs can thrive further. So just an additional point to be a little beyond from what you had asked. But I feel that is very critical and a space that banks can enjoy by collaborating with fintechs like us.
Got it. All right. Thank you so much. Thanks, everyone.